To the Startup Council to help you accelerate your startup. We're here today to help you and founders all over the world, as well as many of my friends who are fellow angel investors, to figure out how to find the growth opportunities that can change the world, hopefully make you rich and make the world a better place all at the same time. I'm Scott Fox. I'm a serial internet entrepreneur. I'm the author of these books you see behind me. I'm a longtime angel investor, and these days I run the Startup Council, startupcouncil.org. You invite you to go check that out. We're a free community service group that I started kind of as my give back effort to help other founders who are struggling, like I used to find their way in the world, learn how to raise money, learn how to find customers, find that elusive product market fit, demonstrate traction, find co-founders, and most of all, I guess, find problems that you can solve on a profitable basis that makes the world a better place, makes you happy, and hopefully makes some money for your investors too. So if that sounds like the right kind of place, thanks for joining me today. I do this once a month at lunchtime. It's lunchtime here in Southern California where I live these days. And I'm just turning on the camera here in my office to see if I can help you. So if this sounds useful to you, I'm happy to have you join me. Thanks for being here. I'd like to, let's see, you can come and ask your questions if you want to come over here, founderofficehours.com. And you need to turn on your camera, and you can join me on camera and ask me questions about your startup strategy, marketing, fundraising tactics, things like that. We can talk about pretty much anything. I've been doing this a long time, so I'm happy to opine if that's helpful to you. I do this because, well, a couple reasons. The world of startup fundraising is a lot more difficult than I think it should be. To be quite honest, it's really not fair. There's a lot of gatekeeping on, and the information is complicated but not that difficult. And the problem is there's such a disconnect. If you're a long-term expert in your field and you're at the point where you feel like you could create a new business based on the expertise that you've built, well, it's not that likely, unfortunately, that you also have expertise in the kind of arcane methodology of Silicon Valley and venture capital, right? Those don't necessarily overlap. If they do, awesome, right? But the problem is that I went to Stanford for graduate school and a lot of friends in Silicon Valley, and I've raised money and lost money for startups for decades now. And it's hard for people to connect those dots, right? If you're good at one thing, it doesn't mean you're good at everything. And I'm here basically as, like I said, kind of a give back effort, like my books, right? These, if you haven't seen my books, these are 3 books. These are in English. The rest are foreign translations, Japanese and Turkish and Russian and Polish and Vietnamese, right? The books are all over the world, but they're all my effort to try to help you come from an outsider, like I used to be, to being an insider. Because the odds are you've spent your career, even if you're a young person, you've spent your life doing something that isn't this. So if you're trying to do this also, it's like, you grew up a swimmer and now suddenly you're going to try to join the Olympic team, for basketball. Like, okay, you may be a talented athlete, but these are kind of different skills and you might need a coach, you might need to join a team, that kind of thing. So anyway, that's why I'm here, to try to help you. And we're going to spend the next hour and a half, and you're invited to share your questions. If you have a startup pitch you want to practice, we can do that for friendly feedback. And by the way, this isn't just me talking. I do this because, first of all, I think there's a hole in the market that I'm trying to help you fill, and hopefully it's helpful. And I hope you would leave comments and likes and follows. You know how that's all this nonsense works on social media. Actually, let me put that up. Let's make it official. There. Please, here, this one. Like and subscribe, please. And by the way, I'm going to turn on the chat room in a second, and I'd love to hear from you. If you're on LinkedIn or YouTube or Facebook, I need to know that all of those different channels are working, because sometimes we have different problems, right? And if you're watching this later in the archives, of course, these are free, archived on YouTube. You're also welcome to like and subscribe at that point. But the reason I want to do this is to fill in the holes. A lot of people provide specific expertise, and a lot of it's bullshit, frankly. But I'm here to hopefully answer the real questions you have, to kind of fill in the cracks. A lot of people are trying to sell you services. There's a lot of consultants out there trying to, consult, which really means sales, right? Trying to fill up your inbox and empty your wallet at the same time. So this is a helpful hour, and brought to you by the Startup Council, right? So I encourage you to go over here. This is a free group that I started specifically to fill in the holes. you can go up here and see different services that we offer. We have an investors directory. We have a place where you can list your startup to get publicity. We have a place where you can list yourself if you're a service provider, like an accountant or lawyer or a web development shop, and you're trying to attract clients. That's startuphelpers.org. We have a whole bunch of different things, and they're all over there at startupcouncil.org. So that's where you should go. Okay. So let's see, a couple disclaimers. This session's being recorded and will be shared online, so don't say anything stupid. And this is all just made up, okay? This is just for entertainment purposes. I'm a pretty qualified guy. I've been doing this as long as anybody at this point, and I have lots to say, but it isn't necessarily right, and it doesn't necessarily apply to your situation. So hopefully this will be helpful to you. And if it's not, I'm sorry. It's worth what you paid for it, I guess. But if it is helpful, please like and share, etc. And if not, and even if, regardless, you should consult your own legal, tax, accounting, psychiatrist, all those other kind of professionals that are important to making real world applications for the specific situation that you're in. This is just general advice from some friendly guy you met on the internet. Okay, so let's get us going here. Now, the idea today is that we're going to take questions, like I said. So I'm about to turn on the chat room. I can see that backstage is full already. We've got room for 10 people backstage, and I see a lot of you are trying to join, so thank you. The system can only take 10 at a time, and I can see Nadim and Amir and Frankie and Dave and Kenlin and Lauren and Nick and Nikki and Chris are the folks who are backstage. So they're going to get the first crack at asking questions. And when they're finished, guys in the backstage, the people who I just named, when you're finished, please kind of like hang up the phone and then go watch on YouTube or LinkedIn Live so that you can allow room for other people to come in and ask questions. Okay. And we'll try to get through as many people as we can because this is hopefully supposed to be fun and easy and friendly. All right. So that's the vibe. I'm going to turn on the chat room now. The chat room is specifically for you folks all to say hello. We're going to have the chat. I guess I need to click the button. Here we go. Let's click the button. Actually, you know what? Hold on. Let's bring everybody on and we'll take some notes. And let me just review the chat room. These chats are working. Good. Yes. So hello. Yes. Hello from France. Hello from Hawaii. From Orlando, from Singapore, from San Jose, Zurich, Nashville. Great. We got a great crowd here today. Excellent. All right. So I'm going to turn on the chat room in a minute, but first I'm going to bring all the folks backstage on camera for a second. Okay. And those of you who are about to come on camera, hold on. I'm looking for my notepad. Where did I put my notes? Right here. I'm going to just take some quick notes. So if you could just tell me real quickly what you want to talk about. Okay. And what you're going to talk about so that I'm going to take notes and we'll figure out what kind of some order that makes sense for everybody. All right. So let's see. So here we've got Amir and Nadim, and here is Frankie. Hello, Frankie. And here comes Dave. And let's see here, Lauren. Great. We've got some ladies in the house for a change. This is good. Okay. And not everybody's showing. Okay. So let me... Hold on. Let's see. Let's try like that. There's a few more. Okay. That's getting there. And Chris. All right. Good crowd here. All right. Hi, everybody. Let's see. And somebody's got a lot of background noise. So I'm going to get feedback. So let's see here. Glenn, not Dave. Maybe that was Dave. Yeah. Dave, I'm going to mute you until you talk. And then not Frankie. Okay, maybe it's me, right? You never know these magic internet things. No, not Chris, not Lauren. Okay, well, I guess that's as good as we're going to do. Dave, don't worry, we'll let you talk, but you had some background noise there. Okay, all right. So, hi, everybody. Nice to meet you. I'm Scott. I don't think I've met any of you before, but I'm glad that you're here. So I'm just going to have you each chime in for a second and let me know what you want to talk about today. Just the quick version, okay? Not the whole pitch, just like the 10-second, I want to talk about fundraising, or I want to talk about, why my dog left me, that kind of stuff, just quickly, and we'll get through that. And then I'll make a little agenda, and then we'll turn on the chat room, everybody, and everybody can contribute, okay? So Dave, let me let you on first, since I think you're the one that was having some trouble. So really loud there, Dave, but can you just speak quickly?
Is it better now? I'm not sure why it was feedback.
Okay.
Is it all on? Okay, cool. Yeah, so my question is or the topics I'm going to want to talk about, it's fundraising, and it's a two-part question around I guess what's advisable to include in your fundraising budget?
In the budget. Okay, interesting. It's usually the deck people ask about, but sure, we can talk about
Well,
that.
similar, yeah, similar to that.
Okay, cool. Gonna mute you back, and I'm gonna turn off your camera. Don't be offended. We'll be back to you. Okay, cool. Let's see who's next here. Let's up there at the top. Who's that? Nadim. Nadim, go ahead.
Hi, everyone. Thanks Scott, for hosting that event. So mainly my question is about my startup. At what point I would start into like looking into getting funders and stop paying out of my pocket, out of my salary for my startup?
Yeah. Okay. Great question. Where are you today, Nadim?
I am at the already. The business has like the formation has been completed as domain and license,
Okay.
and I'm already planning a prototype to present.
Sorry, no, I meant geographically. Just where do you live?
Where I live. I said where I thought where am I? The project. I'm in Arlington, Virginia.
Virginia. Okay, great. Nice to see you today. And we'll be back in a minute. That's a great question. Okay, and then somebody got hidden there by the. Let's see. Okay, who is that? Amir. Hey, Amir. Nice to meet you. Where are you today?
Hi, Scott. I'm in Los Angeles.
Oh, okay, right nearby. What did you want to talk about?
Yeah, so I'm doing a hard tech startup, and I'm just starting to, do my cold emails and, filling out the incubator and accelerator applications. And I was hoping to talk about our pitch decks, and was hoping that if there was time, you could roast my pitch deck and and kind of talk about that.
Okay, got it. Happy to talk through that. I do deck reviews, but I can't do them live. It's just
okay.
too many screens. If you want to pitch, you can actually talk and pitch, and we can talk through your pitch.
Sure.
But decks themselves, I do. If anybody wants it, I do reviews over here.
Okay.
But that's a little more complicated. Okay.
Sure.
Okay.
So
we'll get back to you and thank you. Okay, and then we've got. Let's see who's next here. Still full guys trying to join us. Frankie's next on my list. Hello, Frankie.
Hi there. So I'm here actually with Lauren. We're both representing the same company today. And we are actually in an interesting stage of things. We're not necessarily a brand new business, but we are acquiring a business. And so any insight that you have in terms of maybe different ways that we might be able to navigate the startup space and resources around fundraising and capital, because we do have 2 years of background that we're bringing into this business. So just any insight on that in terms of being just in a bit of a different position than just starting from ground zero.
Yeah, not from scratch. Okay, cool. That's interesting. All right. So we'll put you a couple questions in. We'll do the basic stuff first, and then we'll come to you ladies. And I have to say, it's great to have some women here. I think last time or 2 months ago, it was all guys, and that's fine, obviously, but it's kind of lame. I mean, we need to really support women entrepreneurs. So I'm glad you're here. Thanks for coming.
Yes, and I know Lauren may have something different that she wants to bring in terms of questions as well, but that was just what came to my mind.
Sure. Lauren, what's on your mind? Anything different? Lauren?
Can you hear me okay, Scott?
Yes, there we go. Yes.
Can you hear me okay, Scott? Sorry, my connection just went out.
Okay, yes. Okay, sorry. We're going to have to, Lauren, or Frankie, can you tell Lauren that we love her, but we got to be able to hear her. Okay.
Yes, I will.
Thank you. Okay, and then sorry, I can't see everybody's names. Kenlin. Hi, Kenlin. How are you? Looks like you're muted, Kenlin. Did I mute you? No? No? Can't hear you. No? Sorry. Okay. All right, we're going to have to move on. You can adjust your settings. You're welcome to one more try. Can you talk? I don't see your lips moving. No, nothing. Okay, sorry. Nice to meet you. Michael. Hello, Michael. Where are you today?
Hey, I'm out of Irvine. Sorry, I'm outside. There's not too much background noise. but I'm interested in hearing about what legal protections we should have in place before reaching out to investors.
Okay, excellent. I'm going to have to mute you. That truck is, yeah. Okay. You actually, thanks to Michael, he actually emailed in earlier, so I got to think about that one. Appreciate that. If any of you are repeat offenders here, it really is helpful for me. People email and I can think about what you're going to ask me. So yes, we'll get to Michael's question in a moment. And looks like we're up for Martin. Hello, Martin. Nice to see you.
Hey, Scott, how's it going?
Good. Nice to see you today.
Likewise. I'm sorry, I didn't hear you.
What would you like to talk about?
Yeah, so I'm in the B2B marketing space. Had a company that we have clients and we've been self-funded for the last couple of years, and we're at the spot right now where we're looking at investing into different platforms and building different technologies to basically streamline our workflow. And I'm kind of at the point where it's looking to bring on investors. So I kind of wanted to see what exactly I need to look for in an investing partner, or somebody that could actually, it's not just about the money, but somebody that can actually bring value into the company.
Oh, okay. Yeah, that's a good question. Excellent. Okay, well, thank you. Thank you both, and Frankie for sticking around. And let's see here. Okay, so that gives us a table of contents, as it were, for today. So thanks all those folks for contributing. That should give us plenty to talk about. I'm going to turn on the chat room now, too. And you can see that there's lots of people here. Appreciate you all being here. And the chat will start showing up here in a second. If you're on YouTube or LinkedIn or Facebook, there's someplace else, too. I can't keep track of them all. But we will be talking through those, and I'll be answering questions from the chat room as well. The most common question, of course, is how do I get to ask a question? And the number one answer to that is simply to come on camera or to put it in the chat room. Now, the backstage only has room for 10 people, and that's why a lot of you are struggling to get in, because we have 10 people back there already. So don't take it personally. Those folks will work through their questions as well in the time that we have available, and hopefully we'll get to yours as well. Yeah, that's kind of the concept. So let's just, you heard what we're going to talk about. Let me take a second and think about where we're going to go in terms of the order of these notes that I just took. Some interesting progression there from early stage to later stage, mostly about fundraising, which is the usual question we have, as well as some questions about legal issues, which is another common one for us. And let me just review the chat room in case anything's on fire that I missed. And those of you who arrived early, it looks like they won't display the chat unless you post again. So you're welcome to post again if you'd like publicly. Just starting at the top here real quick. Chris and Nadim and Angel, the folks that's a private chat. You're in the backstage chat, so I can see you there. And I will get to that when I can. But I'm really focused on the public chat is what I'm talking about. And that's over on YouTube or LinkedIn, I think, right? Do we have anybody from LinkedIn here? It looks like everybody's from YouTube. Let's see. Hello, Roderick. Hi, Rachel. Morteza. And let me know where you're from, folks, too. Victok is from France. Pasca from Hawaii. Amin from Orlando. Laser Pulse from Singapore. Eric and Deepak from San Jose. Bobby, the Zoom link is it's founderofficehours.com, but the backstage is full right now. And then Morteza, let's see. I'll get back to that if I can. Hello from Zurich. Athena, hey Athena from Anaheim. Alana from Nashville. Let's see. Do you want to book an appointment? Renee says, yes, Renee. Yeah, I do this. Appointments cost money. I don't have any way to control my time except to charge for it. So yes, you can come and book over here if that's helpful. And I only have room for a few of those each month. I spend most of my time at events like this where I can talk to lots of people and help lots of people at once. So hopefully this is helpful to you. And by the way, there's lots of archives of this on YouTube and on Blog Talk Radio. This podcast, I've been doing this on and off for many years. Let's see, YouTube. Hello, Corbin. Send questions. Pascal, yeah, you're doing that in the right place there. Salil from Washington. Very cool. Okay, so Leo, that's a good question about AI and talking to VCs. Let's see. Chris, Portugal. So Chris, let me address that. Chris wants to develop single-family residences as well as townhome communities. And Morteza wants to build a real estate business that rents shared medical offices to doctors. Those are both fabulous ideas, but they're outside my expertise. So I'm happy to talk about raising money in general. But what we're talking about today really is raising money from high growth investors, meaning really venture capital, and angel investors who primarily focus on software and technology related ventures. So the principles, I think, are largely the same, but we don't have time, unfortunately, to talk about real estate ventures. So I'll be skipping over that. That's about as much as I can talk about it here. Okay, Boston, Herndon, Virginia, Andre again. Hey, nice to see you. And LA also. Okay, London, great, awesome. Okay, so let's get going. So that's just want to make sure, I have to check that, make sure everything's working. Sounds like you can hear me, which is also often an issue. Let's talk about your questions. All right, so all right, let me look at my notes here. So Dave, Nadim, Amir, Frankie, let's see, fundraising. Okay, Nadim, I'm thinking you're probably up first. Okay. Well, these are all good. Well, you know what, Michael, let's do you first, because yours was a sort of a preface question about legal, and then we'll go to Nadim, and then probably Dave is my guess. Okay, we'll see how this evolves, and that's just to let you know. So let's go find in my cute little control panel here. Where did Michael? There's Michael. Okay, there he is. Hi, Michael. Oh, you're muted. Sorry, that was my fault.
Not used to this. Yeah.
There we go. Okay. Cool. All right. So give us the quick version of your question again, if you wouldn't mind, and remind everybody where you're from, please.
Yeah. So I'm here in Irvine, California.
Excellent.
My question was, what legal protection should you have in place before reaching out to us? I know there's the typical NDAs and all that, but in terms of, you know, should you have an LLC? Should you have be trademarked? All that good stuff.
Okay, so that's a totally legit question and a good foundational question. And it's smart. Michael's asking a good question. Michael's on the ball here. He emailed me first, and he's thinking about what he should do before he acts, which is two things in the right direction, right? So legal protections are, frankly, kind of few and far between in the venture world. The venture world really, if you're talking about venture investors, the venture world really runs on reputation. And as you mentioned already, this is a big one. A lot of people make this mistake, and it sounds like you've already figured this out. Venture investors will not sign non-disclosure agreements. We just see too many deals. It's the same way that Hollywood studios won't accept unsolicited manuscripts, because then everybody's going to say, hey, I sent you a script for that new Mission Impossible movie, right? And then claim some sort of ownership. So investors are the same way. We can't sign non-disclosure agreements because it would stop us from seeing all the deals that we need to see to find the best ones. So that's one thing. It will make you, frankly, it'll make you look like an amateur if you ask for an NDA. And this might not be true if you have a real hard tech idea or deep patents or something like that, but that would still not be the first conversation. You'd have several conversations first and then say, hey, we're getting to the point where I'm ready to tell you about my secret sauce. But now we need to talk about an NDA. And at that point, you might negotiate one. But it's as a rule, it doesn't happen until at all, or maybe far into the relationship. So that's one. Two, your question about corporate structure. That's a good one. And this verges, Nadim, on your question as well, when to start fundraising. So we'll get to you about that in a second. But the legal protections in terms of corporate structure are kind of up to you. Fundraising, we'll talk about this more with Nadim, is really about building relationships. So you can start whenever you're ready to build the relationships, because no one invests on the first date, right? This is like finding a long-term spouse, right? You're going to have many meetings over time. And if you meet with people who are interested in really early stage stuff, they may be excited to mentor and help you figure out everything, including what kind of legal structure to have. So there's no clear answer on that. If you're trying to raise, real money, like, $20 million or $100 million for a deep tech or a med tech startup or a chip fabrication plant or something, real money, then you're going to need corporate structure up front. But you would have figured this stuff out before, because you're already dealing in 7, 8, 9 figure amounts. So that's a little different. a short answer for you would be it depends, but it also sounds like you want to find good legal counsel. And especially since you're here in Orange County, we can make referrals to the Orange County Startup Council, to several of our sponsors who are great, who do this all the time. And I would counsel everybody, including our new friend Michael here, that you don't want to use just any attorney. Venture capital is a very specific game, and you don't want to use your brother-in-law who does divorces, or your sister who, does car accident insurance claims. This is a thing, and people that do it all the time. It's more like surgery, right? You want somebody who does, heart transplants every day, all day, when you're going to get your heart transplant. That's kind of dramatic, sorry. but the concept is you want to find a specialist, and we can help you. Actually, anybody here, if you want referrals, we're happy to do that. It's important to find a good partner for your legal needs. Was that helpful?
Yeah, definitely. I appreciate it.
Okay, great. All right, we're going to keep moving today. I promised myself I was going to make shorter answers. I'm a pretty good talker. I'll try to cover a lot of people today. I would also encourage you, Michael, and anybody else who's here in Southern California, to sign up for the Orange County Startup Council. And we have events all the time in person, and we're happy to meet you in person and talk to you in person at the events that we hold. We also do online things, which you should go to startupcouncil.org. Where is that? Let me just put up that URL again. This is where everybody should be going, because we have all kinds of services and lists. Come on. Well, here's the events list one. This is a specific one. We started the world's only calendar for free for you guys of all the events that we can find that are only for startups, only online. So if you don't live in a big city, and you don't live in Palo Alto or here in Orange County or New York City or London, you can check in on this calendar and get emails of events that are for founders, free networking and training and pitch competitions and all that kind of stuff. And this newsletter will fill you in all those, so you can participate in the creator innovation economy remotely more easily. So that's one of the many sort of little services that we have. Okay, here's the more general URL. Okay, that's what I meant to say. All right, so let's move on to Nadim. Nadim was next. Thank you, Michael. And Michael, if you don't mind, a lot of people are trying to get on. If you could hang up here and then go over to LinkedIn or YouTube instead, that would free up the backstage space for other folks to participate backstage who have questions, because people are knocking on the door. Okay, so here comes Nadim. Hello, Nadim. Nice to see you. And where did you say you were today?
I'm from Arlington, Virginia.
Arlington, that's right. DC, excellent. Okay, cool. All right, so your question was, well, tell me your question again to remind everybody.
Yeah, I'm in the process of launching my startup, but I'm still in the prototyping now to present to potential clients. So I want to know at what point I would stop spending from my pocket and look into fundraising. What point of the implementation?
Yeah, no, that's a great question. And it's one every entrepreneur faces. I fought this battle myself, man. I'm fighting it right now. I'm always building things and spending more than I should on my own ideas, right? That's what happens when you're an entrepreneur. It's a delicate balance. There's no, 100% answer, right? You know your situation better than I ever will. But my general advice would be, well, you need a budget, right? You need to have some sort of plan, like how much you need and when. And you're going to compare that to how much you're spending versus how much you have in the bank and that you're willing to spend, right? You don't want to lose your house or spend your kids' college money or something like that unless you're pretty certain that there's going to be some upside. So this is a personal calculation you need to use. I think the answer is not kind of what you meant, but I think this is the real answer. And it's what I alluded to with Michael a minute ago. You really want to get out and start fundraising now, like yesterday, because fundraising only happens when you build a relationship. The media loves to show that like people go to a pitch competition and they've been in stealth for years and they come on stage and they pitch and suddenly, the money rains down, and it just doesn't happen that way. A quick question. What kind of company is it? Are you software or hardware?
It's a software online platform for, it's a first time product.
Okay, so the SaaS.
I sent you an email about it. It's called.
It's through the. Oh yeah. Sorry, you did. Yes.
Okay.
Okay, yeah. Oh yeah, I'm okay. Tip my nurse. I remember seeing this. Okay.
Yes.
Okay. Well, you could practice that pitch later if you'd like. It sounds interesting, but let's answer your question first. Yeah, sorry, you did. I didn't realize that was you. Okay. Okay. So if it's a software thing, then this is I'm asking because, like I said earlier, I don't have a lot of expertise, say in real estate or even med tech, but for software, this is what I do. So you want to get out there and build relationships as soon as you can. What you're going to present to investors is a budget that says basically, do you have any revenue yet?
No, I started in the formation. I'm creating a prototype that I guess I'm going to spend on, like, which would help me in pitching
For
when
sure.
I start pitching. And
Yeah. Okay, got it. So, okay, so if you don't have any traction yet, with traction is what they call, growth and revenue and so forth. If you don't have any traction yet, the odds are nobody's going to invest anyway. That's the fact. People won't really tell you that, but that's the truth. These days, there are way too many software opportunities for investment that anyone is going to take that risk unless they already know you and like you. That's why people usually start with friends and family, because they already know and trust you. And they may not even understand the idea, but they are fans of Nadim and they think that he can make this happen, whatever it is. They don't maybe even understand, but they're going to make it happen. And that's why friends and family are the lead investors in most early stage companies. So you need to start finding investors and turning them into friends, not necessarily family. You don't need to marry anybody, but finding friends and building those relationships so that they can see your growth. And not everybody, because this is confidential stuff, but those that seem interested, that match the vibe, you can tell them, and I would tell them the truth because they're going to find out anyway. Like, I'm funding this much. I think I have, whatever, 6 months, 12 months, 2 years worth of runway left. I'm looking for partners. I know we don't have any traction yet, but I'm thinking in whatever, 90 days we'll hit this milestone, and 4 or 5 months we'll be here. And at that point, I'm looking for some money, and and then I would want to start, covering these expenses, which include me. And that's just the fact. And there's a lot of mystery around these things, but honestly, if you're talking about angel investors, they're partners. They're not like a bank where you go in and you kind of like, I hope they don't realize that I lost my job. I still need that car loan, and I'm going to like, talk them into something, right? This is a partnership. And the sooner you find people that want to join you on that ride and that you can be honest with, the better off you'll be. Is that helpful?
Yeah.
Yeah.
Very helpful. Thank you so much.
Okay, great. Well, nice to meet you, Nadim. Excellent. I'm glad that was helpful. I know when I started raising money, and even today, there's always bigger investors, right? And I know it's easy to be intimidated by the folks that have the money, especially if you don't, and you're feeling pressured, right? You're trying to make payroll, or you're spending all your own money. It's very intimidating. But we are people too. We, meaning me, as with my investor hat on, right? We're just there, like, especially angel investors. Most of us want to help. We're curious people. We want to know what's going on, and we like to help solve problems. So, if you have too many problems, I got other things to do. But if you have an interesting structure and opportunity and problem solution set that looks like it could be solved by your efforts, that's kind of where we like to play, right? So it's really about building relationships more than just doing 100 pitches and hoping something sticks. So anyway, this will all be in my next book, if that helps. Let's see. So let's keep moving here. Hopefully this is useful. How are we doing in the chat room? Let me just check in. Are we people? Yeah, it looks like the viewership is climbing, not declining. So that's good. Let's see, Long Beach. Let's see, Chris and B and Agnes. I should have a show on Fox TV. Thank you, Agnes. Yes, go tell Fox or tell anybody else. Yeah, I'm happy to do a show. I've done a lot of broadcasting. You might be able to tell, but I like helping people, and this is a fun way to do it. So I'm glad it's helpful to you guys. Let's move on to our next question and see. Let's see here. That's what we need. And who was next? It was going to be Dave. Here comes our friend Dave. Hi, Dave. So I need to unmute you. Yeah. Okay. So,
hello.
Yeah. Hey. So you still got some background noise. I don't know what it is, but I can hear you. So let's.
Okay. Yeah. I'm sorry about that. I'm not sure what's going on.
It's kind of ambient. Like are you using? It looks like you got
Well, let me try these. Is that better?
No, it's the same. It's all right. It's all right.
I apologize.
That's all right. It's okay. It's harder when there's a group of us. Just the two of us will be fine. Okay. So you wanted to talk about fundraising. Oh, and what to include in your budget. Was that right?
Yeah. So the gist is, so I'm building 2 different AI products, and I've built and launched the prototype for one of them, and I'm looking to raise money to continue building it and help with marketing and growth. The issue that I have is I work full time and I don't have any money for marketing. And I've done a few small social media ads, gathered about 20 users, but I need to do more of that and more outreach, and I'm looking to raise money to continue building in the time frame that I want to, and to grow. So my questions are for the fundraising budget and the pitch deck.
Mm-hmm.
One, is it advisable to include marketing expenses in the fundraising budget? And if so, how to present it, how it should be presented? And two, how do investors typically view the inclusion of like a founder salary in the fundraising budget, especially in the early stages?
Sure. Okay, good questions. If you don't mind, I'll take those in reverse order. Salary is a fact. People feel embarrassed. Like I was just saying, it's intimidating to admit that you need to be paid, but it's a fact. So I would disclose it. I mean, you got to include it, right? Or you're going to go broke. So what you don't want to do is say, with your $1 million, I'm going to pay myself half of that, right? That's not going to fly with anybody. So it needs to be low. Like, I'm sustaining myself because I believe so much in the upside of the equity, right? So pay yourself. I don't know what market rates are for a guy of your talent and where you live, but, we're talking a few thousand a month, not champagne caviar sort of rates. And you can, even if you're doing a multi-year plan, you can even have that step up. You might start at 3,000 or 4,000 a month and 5,000 a month, 8,000 a month, but you're not going to go high. Because presumably things are going to kick in and you're going to do another fundraising round, and that'll happen kind of naturally because the new board will value your services because of all the customers that you've brought in, right? So that'll kind of work itself out in the long run, or the medium run anyway. But in the short run, you kind of got to be honest. I think nobody's going to appreciate, as an investor, you're like, oh, this all looks great. Oh, and then you're suddenly like, oh, by the way, I need to pay myself $100,000 a year. Like, wait, whoa, that throws off all the mechanics of the financials that we've been running, right? Investors eat numbers. So you got to give us all the numbers or we'll have indigestion, and you don't want that. The other thing to do that investors really appreciate is knowing how much money you have put into the company. So you should quantify this. And some of that can include your own salary. So let's say, I'm just making up numbers here, you put $100,000 in, and I don't know, if half of that was salary, say over the last 2 years, whatever, right? That should go in, it should be disclosed and discussed because it's a common question. I'm in pitch meetings all the time with angel groups that I'm in and stuff, and people always like, how much have you put in? Like, people want to know, are you just expecting us to pay for your dreams, or you actually have some skin in the game here, right? And if you're able to say, well, I put, over the last 2 years, I put in about $100,000. Half of that was for me to cover living expenses, and half was hard costs, to pay developers or to buy server space, or whatever it was. That will be appreciated. And I'm going into this detail because we generally will give more credence to the hard costs than to money you pay yourself. And this is why you're asking, right? Because there's a sensitivity about like, how much do you pay yourself? So if you say, I've been working on this and I spent $1 million on this, but it was all $1 million in my own salary, like, okay, well, you're just living off your savings. And then that's not quite the same as I spent $1 million because I had 300 people in Ukraine and India developing this amazing AI platform, right? That's a different sort of cost. Are you with me? It looks like I'm.
Yeah. So yeah, exactly. And so what about, to that point, what about time cost? Because I developed the whole thing. So I was the I didn't pay really much, but I spent about like 6 months developing it. On my time. So that could be equated as money, or no?
Yeah, it can, but it's going to be discounted is all I'm saying, right? Because it's you, and we know that you're getting double duty out of it. So if you spend $100,000 on that, that's fine. It's $100,000 that you don't have anymore. I get it, but you're also, paying for your lunches and your car payment, and okay, so it's not the same as if you wrote a check to somebody, to Microsoft for Azure services or something. Like, that's a hard cost, right? So it's fine. It's not quite as good as having paid for someone else. Does that make sense?
Yeah.
Okay, so that's enough on that. Hopefully that's helpful. Happy to follow up on that if you'd like, but let's talk about the other one, because that's actually, I have more to say on the other one because it's a more common question and a great one, which was about marketing. Like, so how do you put marketing budgets in a plan or a pitch, and how do you frame that? And this is a great one because it's usually done, I think, wrong. So I'm glad you asked. Here's my take on that. So first of all, if you're going to do marketing, yes, of course you have to put the costs in there. Everything needs to be there. You can't really be spending marketing money until, no, that's wrong. Nobody's going to want to invest in you to give you marketing money until you have demonstrated some traction. Like we're not paying, nobody wants to pay you to figure out your marketing. Maybe a couple $1,000 or something. You want to run some little tests, but if we're going to give you 100 grand, we don't want to give you 100 grand to then go start marketing when you don't know where you're going, right? What you want to do is you want to present your marketing plan in terms of milestones. So if you say we're raising $1 million, $1 million is an odd number to raise. I wouldn't suggest that to anybody, which is another topic, but it makes for nice, simple examples. Okay. But we're raising $1 million and half is on development of the team and, coding and so forth. And half is go to market for marketing. Okay. So that 500 grand, that's not enough because that doesn't mean anything, right? If you say, okay, I'm going to take your money, I'm going to spend it on marketing. Okay. Of course you're going to give some detail. What do you mean by marketing? Do you mean, going to trade shows? Do you mean buying ads on Google? Do you mean, launching a podcast? I don't know what you mean, right? So of course you have to give it detail. And here's my point. What we really want to see is what's the ROI on that marketing money? Because marketing money can just be blown, right? And this is why you're asking, right? You understand it's easy to see marketing money as, hey, we all went to Vegas for the weekend and met people and networked, right? And the money's gone. What we want to see is milestones. So you should say, of the 500 grand, we're going to do 50 grand of testing in these ways. And at that, we're going to generate this kind of traction. And then with the next 100 grand, we're going to double down on whatever worked. And then we're going to convert, hopefully that means we reach 10,000 people. And we're hoping to get our customer acquisition cost from $100 a person down to $15 a person with a yield rate of 3%. We want numbers, right? So if you can take your marketing plan and this, I see this all the time. It's probably my number one complaint, which is why I'm going off on this. But I see these pie charts all the time. With your $1 million, here's a pie chart. We're going to spend it, 40% on marketing, 40% on people, and 20% on overhead. Well, no shit. That doesn't tell me anything, right? This is my money. You're taking money from my kid's college fund, and that's all you got to say to me? Come on, right? You wouldn't say that to your mom, right? So got to be specific and put numbers on it. Sorry. That's one of my favorite topics. So thank you. Is that helpful?
Very helpful. Thank you. And,
okay.
We met before, actually. I'm nearby, like a year or so ago. I'm looking forward to coming to the event soon. So.
Okay, good. You look familiar. Yeah. Okay. Yeah. We've got another conference on the 21st, and we'll probably have a masterminds group before that. So yeah.
Right. Well, thank you so much for the help. Yeah. Nice to see you too.
Okay. Bye-bye. That was Dave. And let's see here. So if you're tuning in late, I'm Scott Fox. I run the Startup Council. We're here to help you, trying to be clever and answer questions for you that can help you accelerate your startup. If that's useful, we're here every month, fourth Tuesday, noon Pacific is lunchtime for me, and trying to help you out and answer questions that are relevant to accelerating your business online. If it's useful to you, hopefully you will invite your friends, come on and subscribe and like and all that kind of stuff. Just a reminder, this is not real advice. This is all just for show. And I'm trying to help, but your mileage may vary. You need to consult your own professionals. All this is publicly recorded and shared, so don't say anything crazy or too confidential. And if you haven't liked and subscribed yet, would you please? Trying to amplify the signal here for all the services that we provide for free over at startupcouncil.org. Just clicking on those likes and comments, reposting, all that stuff. It really does drive the algorithms, and I'd appreciate your help. So, okay, so next up, what do we got here? So let's see, Amir. Oh yeah, okay, and then Frankie and Lauren. Okay. All right. Well, any of those could go. Let's see. Let's go to. Let's see. Frankie and Lauren, I think, might be our next stop. There's Frankie. Hello, Frankie. And
hi there.
See if we can get Lauren back here too. Or did Lauren leave because her mic wasn't working? Okay, she's not there. So okay. Well, then I guess it's just me and you. Okay, so why don't you remind people the situation here?
Okay, yeah. So I'm located in Portland. Lauren is located in San Diego, Portland, Oregon. Mm-hmm. Yeah. So we have just finished the process of acquiring a women's clinic. And so it's a digital healthcare platform. And we have had funding in the background over the last 2 years. We had investors, but we're not taking any of the financial assets of the company with us. We're actually starting the finances over. But in some ways, we have a patient base, we have providers with us already. So that's what we're moving forward with. And we have a membership model. So we have some revenue that's going to be coming in on a monthly basis. So what we've been doing right now is we're in the middle of a raising round that we're calling kind of a transition fund that we're looking for. And so just any advice that you could provide on this unique kind of transition that we're in, maybe how much money we should be looking to raise in terms of that transition, but also other resources like our incubator is a good thing for us to be a part of if we've already kind of come this far in the process. What types of VCs do we need to be looking for that would already like to see some growth and some background? So things like that.
Interesting. Okay. Well, congratulations on the transition. I hope that's going to go well. Sounds exciting. Just a couple qualifying questions. How much had they raised before? Had it been investor backed before?
Yes, it was. There was 2 different rounds. So one for 500 and one for 150. So 650 total.
Okay. So not big money, still early stage stuff. Okay.
Mm-hmm.
And it's a clinic, but it's digital. So it's kind of a SaaS business. You're expecting to grow and scale digitally?
Yes.
Okay. Interesting. Okay. Well, so it's an interesting question. I don't think I have any great insights into what you would do differently other than disclose, what's going on. That things it's a reboot. I've seen things like this, and it generally goes well when you position it as essentially, we got $650,000 worth of development work for free, right? Somebody else's money was spent. And so we're ahead of the game here, right? We're not seed stage, as you said, and that's attractive to investors. The more common version of that is what we call non-dilutive funding, which means grants, right? Investors love companies that get grants from the government because government doesn't take equity, right? So it's like free development money. I would put it in that same category. So emphasizing that you have essentially rebooted from scratch with the benefit of that previous investment is good. Would the previous investors be participating, or have they been burned out? Any idea?
So they're going to remain partial equity holders, but it wasn't a monetary buyout. It was an equity buyout.
Okay, so they're minority shareholders, and you'd be raising it on top of them. I see. Okay.
Mm-hmm.
Yep. Sense. I guess a lot of the opportunity then would be really targeting the investors, the investor base, right? The women's health and women's tech, health tech, all of those are growth areas. And especially with you guys as women founders, there's a lot of people would be interested in hearing about it, I think. So you're probably aware of, that, but there are a lot of funds that are specifically targeting those overlapping, Venn diagrams of, women and health and digital. That's a pretty good sweet spot you found there, as you obviously know. So I would be looking real specifically as much as you can. Have you seen Startup Investors Directory? This is a service. Actually, this is my fancy promo.
Nice. No, I haven't seen that yet. We'll have to look into it.
Check that out. That's my very high tech. That never crashes, this billboard. But that's very well built, specifically for folks like you, actually, especially because I'm really, a lot of my work is supporting women founders, underrepresented founders, minorities, outsiders like I used to be, even though I look like I am a white male, but I wasn't always affluent. Here, let's see. So this is a service that we built specifically because so many people have trouble finding. There's so many investors and so much noise, and a lot of people claim to be investors who are not. This is the only directory in the world that I think currently allows you to go in and search on almost 50 different categories. So you can filter down to find specifically investors who are looking for women and healthcare and keyword and location, like really drill down. And it's designed to connect the dots for folks like you who have something distinguishing, right? You're not just another, white guy from Stanford with a B2B enterprise software, startup, right? So hopefully that might be helpful. There's a lot of listings in there. And hold on, there was something else I wanted to tell you. I don't know. It'll come back to me, I guess. But yeah, so that might be interesting. And there's a code there that should, I think it's free, or it's $50 or something. We priced it really as low as we could. Over here's another one. This is actually just, I'm clicking on the Chirons I have here. This is a whole page of different funds that I'm involved in that are, actually there's a women's fund that I'm an investor and LP in called the Thai Women's Fund that you might look at. Anyway, so I'm just kind of rambling, but is that helpful?
Absolutely. That's very helpful. And I think that, we've been looking around at, incubators. Do we need to be in an incubator? What are the things that we would get out of an incubator in this stage? I think that, we're just trying to really be efficient with our energy in this stage of transition. And so try not to spread too thin, but also wanting to take opportunities that might be helpful.
Yeah. Thank you. That was the other thing I was trying to get back to, the accelerator. So accelerators and incubators are a great opportunity. This is for everybody, not just you. I was talking about this with, what was that? Oh yeah, a company I'm advising the other day, and they're trying to figure out whether to go that route. And here's the short answer is, I think you should look at incubators and accelerators. Everybody should. Of course, you want to look at the good ones, and you want to find the ones that don't charge you a fortune. There's a lot of people that masquerade and want to charge you like 10 grand and basically don't really do very much, right? Or they take cash up front, especially, or they take a chunk, or both. You also, in the old days, incubators were really about giving you office space, but that's not as big a deal anymore because we can work remotely, as you and Lauren demonstrate, your remote partners, right? So you got to be careful. But I think incubators, accelerators can be great because the number one challenge, at least in my experience, the questions I always get and that we're seeing today are about how to find investors and build relationships. And that is something an accelerator can really help you do. So the biggest question I would ask after the price essentially of the participation is, who are your funders and how can you connect us? And the key question is, I've seen slides, people will put up a slide, these are the 3,000, like 300 funders that we work with. But the question is, how recently have you worked with each of those? And what does worked with mean, right? Because sometimes they'll try to make themselves look bigger than they are. So you got to do your due diligence, is what I'm saying. And where the rubber really hits the road is, what is the valuation of your startup? So in the context of the company I was talking about the other day, most of these incubators these days, they'll give you 50, 150, 250, a few hundred grand in exchange for some percentage of your company. And that sounds reasonable, especially if you haven't raised any money before, although I know you're a little different, but this still applies. You're looking, would say, 150 grand be worth it to me? And that's the question, right? How much versus valuation? So the valuation is your real problem, right? So the company that I was talking to the other day, they wanted to do it. And we were like, yeah, we should do that. Because then I know some, we'll get you, and you'll meet all these people, but their valuation, they're already valued at $10 million. And they can't do that because the whole point of the incubators and accelerators is the deals that they're looking for is early stage. They want to give you, say, 150 grand for like 6% of the company. And generally that implies something like, more broadly speaking, like they want to value you at $2 million or maybe $3 million. So if your company already has expectations of being valued, at 5 or more, I don't know of any incubators, and I could certainly be wrong. I'd love to hear from you guys in the chat. If I'm wrong about that, you will have already outgrown incubators, because they are generally exist because they want to give you a small amount of money for a big piece of the company. And if you're already valued too high, you won't have a match in terms of their price. Does that make sense? Yeah. Okay, cool.
Yeah.
Okay. You're kidding. Okay. So that was what I would look at. Do your due diligence and then figure out what your valuation is. Because if it's above about $3 or $4 million, there are probably not going to be any incubators that I know of that are interested. So, all right. Well, I guess we got to move on. But it's nice meeting you. Hope we see you again.
Nice to meet you. Thank you so much.
Okay. Yeah. And on to our next. That was Frankie from Portland. Hold on, Frankie. There it is. Okay, everybody. So I forgot to mention, by the way, I can see the chat room's busy, and I appreciate you all being here. I hope this is helpful. We're almost through an hour already. Wow. Please have your go ahead and talk to each other in the chat room. I'm not the expert on all this stuff. I'm here because I know more than most people, I guess, and because I get around to doing it. But I don't know everything. So please help each other. You're welcome to talk to each other and cross chatter. Post your LinkedIns, right? Go ahead and, post in there how you can be contacted, or share your, the link to your beta test, or your whatever it is you want to do. I'm going to grab my LinkedIn and put it in for you here right now. In fact, let's see. LinkedIn, if you're not on LinkedIn these days, by the way, and actually this is a quick piece of advice. You guys got to get on LinkedIn. It is so much more valuable than it was a few years ago. I'm finding, I go to try to find companies and people on LinkedIn these days who are raising money and they don't have a solid LinkedIn presence. That's stupid. You need to get out there and update your headshot and fill out the thing and have some friends and followers. It's the first place that everybody looks these days to validate that you're real. So if you don't have an active LinkedIn profile, you don't need to spend money on it. It's free, right? You should really go out and do that. So, okay, let me run through the chat room here for a second. Oh, Patty. Hey, there's Patty, is a friend of ours, a woman founder. Frankie, this is for you, I think. Patty says, EmelineVentures.vc. Okay, so Patty is a funded founder who's a friend of ours, and Frankie gave the thumbs up. Patty, you can't see that. So yeah, maybe you two want to connect. You're actually both healthcare CEO women founders. Okay, let me just run back to the chat room here for a second. Okay. Sorry, lots of chats. This is great. Okay, Renee. Okay, Renee, you asked how to book a book with me. I'll put that up again. There's that. Okay, I'm just going to run through the chat here for a second, and then we're going to go back to some video questions. How do you ask a question? Looks like we're full backstage. Sorry. I'll get to the rest of those though. Salil from DC or Washington State, I'm not sure. Working on an AI platform. I think we can put these up. Well, hold on. To effectively manage diabetes, a prototype that developed, but is now moving to AI. Should I be looking at VCs at this stage or grants? If VCs want a recommendation on prep, it needs to be completed before talking to VCs. So Salil, this is the same answer. I get this question a lot. When should I start talking to investors? The answer is yesterday. Go start making relationships. Nobody's going to invest, even if you have a brilliant product, unless you have relationships. The relationships are what drive the investments, especially at the angel stage. So, and if you don't have investor relationships, then at least have customer relationships, because investors aren't going to invest unless they can see the customers care about what you're doing. So you need to find the sweet spot of spending your time on what you're building, but also getting out in the world. I know as entrepreneurs, we like to hunker down, and especially if you're an engineer or coder type, you want to just kind of hang out at your keyboard, and build stuff. And that's cool. I go into that mode myself for sure. But you have to pull yourself back in and socialize. Sorry, you're in sales. So the time is now. I don't care how far along your prototype is, or your MVP, or your business plan, or your pitch deck. Go talk to people, because that's how the relationships start. And it also is how you get feedback, and you need to adjust course. One of the most scary things that we see as investors is when you guys come in and you say, I'm here, it's time for you to invest. And we go, okay, great. Who have you talked to? Nobody. Okay, who's on your team? Nobody. Okay, so what are you doing? Well, I built this great thing. But who cares other than you? Nobody. Okay, sorry, we don't have time for that, right? You have to demonstrate that the world gives a shit before you could expect us to, right? So get out there and mingle. That's why we have these services. Like I was saying, even if you live somewhere in a not mainstream city, I'm going to put this back up there again. I can't find it, but go sign up for that. It's startupevents.org. It's a free newsletter with all the events. Go to virtual events and meet people. That's how this works. You're not going to make it unless you get out there and mingle. Okay. Moving along here. Okay. What's a gross margin that the VC will be interested to see? The more the better, Christian. Gross margins are great. What we want to see is not just a one-time, though, I guess, would be to suggest, here we go, gross margin needs to be sustainable, right? So there's a lot of people that can have a good gross margin in a limited environment. So you sell it once or twice or even 50 times. But if you're going to build a scalable, world-conquering company that attracts venture capital investment, we need to see a gross margin that sustains, right? And it might only be 20%, although better would be 30 or 60 or 80, of course. But we need to know that it's sustainable once you really scale. And that's where a lot of people fall down. You might be able to do it on a small basis, but you need to scale that gross margin as you grow and keep it going. Okay. I'm just hitting a couple more of these. Will I have a chat on real estate another time? No, sorry, Chris. I don't do real estate. I mean, I do real estate actually, but I'm not very good at it. That's not my expertise. This is really about software and tech companies. Sorry about that, but I'm sure there's a million people on YouTube. Just go Google that. Okay, Marteza says, I am working on software that is working on doctors' communications and connecting specialists to physicians. Talking to doctors is not easy. Help. Okay, well, we're trying, Marteza. Sorry, I don't know what you need. So I'm happy to, you got to give us more than that. Happy. You could book a call with me, I guess, if you'd like, or something like that, or post, be more specific in the chat room and maybe somebody else can respond more specifically. Here's the same thing. Angel's asking this question again. How early should a startup begin to look for investors? Now. Go now. Okay, now. Here's Eric asking, might you know of any upcoming events where you can pitch to investors? Sure. I don't know where you're located, Eric, but if you're in Orange County, California, I'm hosting at least 2 or 3 of them in the next couple months myself. And there's many more. You need to get involved in the Orange County Startup Council. Or if you are not here in Southern California, go to startupcouncil.org and check out the calendar there. We have lots of them all over the world. We're trying to help people. By the way, did you know that we have meetups in 40 cities around the world? There's about 50,000 members of the Startup Council. This is not really as small as you might think of it if you're new to us, but we do this all over the world all the time. And if you're in a foreign, if you're out far, how do I say this? If you're not in Southern California, but you're in any major city across the United States and most major city capitals across the world, there's probably a meetup group there that we started years ago. And we probably have people like you that you would want to meet. So go ahead and check out Meetup or visit startupcouncil.org to see all our meetup lists. This is a good one, Chris. My question, everybody can read this, I think, but you want to be the back-end guy and you want sales and marketing help that would look at sales on commission. Everybody talks about this. And to be honest, I've even tried it myself. It never fucking works. So no. Anybody that's good doesn't need to work 100% on commission. So this is a great idea, but I just have never seen it work. If there's anybody in the chat room that has experiences otherwise, please tell me or post on LinkedIn later where I can see it, or send me an email. I'm easy to contact. Or Chris, put in your contact information. I wish it were otherwise, right? But salespeople that are good, they, like anybody else, they can be paid, right? Why would they work, on commission? I've never seen it happen. I hope I'm wrong. Pasca, you're from Hawaii, right? Aloha. How can I speed up development process to complete an MVP? A solo developer full time. Should I raise pre-product? Well, there's a bunch of questions in there, but I'll cut to the chase. I don't think you can raise pre-product. I don't think that's a thing anymore. People think it is, and that's one of the reasons I do this show. Times have changed. I don't know that anybody's going to fund a pre-product anything, unless, as we talked about, friends and family. Those people already know and like you. So if you want to move faster, I agree. You probably need to hire outside people. You probably need to fund this yourself, or find customers. The in-between here, there's friends and family, but the other is customers who are so excited about what you build that they might give you an advance against future services or something like that. That's an in-between. But I don't see people funding pre-product anymore, unfortunately. Let's see. Okay, yes, please call my agent. Happy to be on TV again. It's been a while. All right, I will try. Oh, she's going to try. Thank you. Where can I find angel investors? Hang in there, Martin and whoever's next. Chris, Simone, Mariana. Angel investors. Facebook? No, I don't think, Matthias. Facebook is not where I would go. For angel investors, that's why we built Startup Investors Directory. Let me put this up here again. Startup Investors Directory is a customized directory whose link I cannot find. My goodness. Why is this so difficult? Sorry, guys, doing everything at the same time. There it is. My goodness. Okay, I'm going to leave that up for a minute. That seems to be the question over and over. Go there and search. It's got 3,000, pushing 4,000 investors, all early stage folks with contact information. And the critical thing is at Startup Investors Directory, it has their portfolios. Like, what have they already invested in? All right. Those of you who are visual learners, there's the logo. It shows what their portfolios are. So here's how you use it. You go and figure out what companies are like yours. What does your company want to be when it grows up? Okay. Go find those companies that were already funded, maybe even went public. Go use those as keywords over here and search and find out who invested in those companies because they did well. And then you contact them and you say, hey, I have a company like XYZ company. I know you did well with that. Would you like to try again? I mean, it'd be a little fancier than that, obviously, but that's how you make friends because you don't know these people, but you show that you have common interests and expertise and say, I'm building the next XYZ. So here's what we're doing. We'd like to raise some money. Would you like to talk, right? And be friendly and outgoing and find the comparables. That's what they mean, comps. Find the comps that will appeal to them. And that's what you can do at startupinvestorsdirectory.com. That's why we built it. I mean, because people asked me this for years. So finally, I just went and built it myself. Kozan says, how do you speak to the best way to reach out to those on your list? Sure, that's right. So how do you reach out? Well, it's just what I said. Cold emails don't work anymore. That's the other reason I built this. You can't, spamming doesn't work, right? We're all flooded. You can't spam. You have to make friends. And how do you make friends if you don't know someone? You find something in common, right? Now, when you do that in the real world, you're at a party, you probably know someone in common. So you immediately say something like, hey, how do you know her? Or how do you know him? Or why did you come here tonight? Because you know you have some common ground. You need to find common ground. So you go and you figure out who are the investors in your space. You don't just send out random stuff, spam, spray and pray. You figure out who invests in this space, who's done well, who are listed in a directory like this, or you can go to PitchBook or Crunchbase. By the way, they'll charge you like $10,000, $12,000. Ridiculous and unfair gatekeeping. But you can search, figure out who the comps are, and then email and you say, hi, I see you invested in this company that's like our company. We're building something cool, a modern version of that that's going to do even better, right? And therefore, please come join our party. And you were friendly and you find that common ground. And if you're smart, you'll do a little more. And you'll look them up on LinkedIn and say, you went to the University of Missouri. Well, so did I. Or, I see you're a big 49ers fan, actually go Lions this year, go Lions. But, like that kind of thing, like find common ground. You don't just say, hey, send me money, you got to make friends. So, okay. So sorry, I'm getting through here. There we go. Roderick says, Roderick has, thank you, Roderick. That's cool. He says it's actually been very helpful. He's been using it lately. Thank you, Roderick. That's helpful. Yeah, we're trying to help and recommend that to all of you. It's the only low cost way to do this. Like I said, they'll charge you $12,000 for access to this kind of stuff. Otherwise, this is, I'm sorry, it's $50, something like that. Oh, this is a good one. Athena, thank you. Let me toss this in. I think this was, who was asking me about budgets? Dave. Yeah, Dave. R&D tax credits. That's a good one. This is true for all of you, actually. There's a thing called an R&D tax credit. You should ask your accountant or research this online. There's a company called Ardius, ARDIUS, run by my friend Josh Lee. The government will give you money back for money that you have spent. I think it has to be on employee salaries. So I don't know that it will work. Athena, you can correct me in the chat room. I think it's mostly for W-2 salaries, but but there may be more to it than that. And yeah, there's real money there available for founders who have invested in their own businesses. Okay, I'm gonna do one more here. And then we'll get back to the videos. How can various stakeholders in the business community plan for potential instability? Wow, Sean, that's a great question. I think that's us. Sean, I wanted to put this up because I know you've come to these before. I don't have a good answer for that. And I hope that there's not a problem. Potential instability after the election? Cash in the bank, I guess. That's usually the answer, right? Cash in the bank. Yikes. Okay, so let's get back to our video here. And we're already at 110. My goodness. Okay. And you are watching Free Startup Fundraising Office Hours. Okay. So next up was, I think, so we did Frankie and Lauren. So, okay, Martin. Martin, you've been very patient. And then let's see. Here's Martin. Hey, Martin. How are you?
Yes, good. How are you?
Good. Nice to see you. Martin is a local person here. Hang on one second. So then, Chris, I'll get to you as well. And Marina, if you're still around. Actually, just one second. Chris, I'm going to bring up. Hey, Chris. Can you just give me a quick version? What's your question so I can work it in?
Absolutely. Chris from Quebec City here in Canada. My question was about what does looks like the workflow with angel investors, the experience when you do not have this network and you would like, let's say, to get more familiar with those without having, let's say, without sounding too opportunistic, let alone salesy.
Yeah. Excellent. That's a great question. Okay, cool. We'll be right back to you. Okay, awesome. But let's hit Martin since he's been waiting. Okay, Martin, go ahead.
All right. So I have a B2B marketing sales enablement company. We've been kind of testing a lot of different markets for the last couple of years and finally figured out like our product market fit on like who we work with and more importantly, who we don't work with. And I guess my question is I'm a solo founder. I've been pretty stretched a little thin between deliverables and client acquisition. So I'm looking at automating and using AI to for my own backend workflow, but this is obviously going to take some capital. So in between either trying to, and also like with bringing in capital, like I can go to friends and family, but none of them have like the expertise to actually help me push the needle on growth of my business. So I guess my question is, I'm leaning between either looking for some sort of technical founder, partnering with some sort of development company, or trying to look for some VC funding. So I think that's kind of where my question is like, where do I go from here?
That's interesting.
But the one thing that you did say that actually kind of got my wheels turning was advance against future services, and I thought that was a pretty good point.
Yeah, well, that's a good way to get going when you actually have services, right? So you already know, you have an expertise, just like I was talking about, actually. So I guess that was directed to you. The other thing I would be thinking about is I have rarely found. That's not the right way to say it. It's hard to find a co-founder, right? I think what you're really looking for is. Well, let me back up. So investors, who knows, right? You just got to beat the pavement and find people who are interested in this stuff. There's no way that I know to do that other than to get out and press the flesh. The Startup Investors Director that we built is the best I've come up with. But you have such a specific niche and you're talking more about a services business rather than a product business, right? So I'm not sure it would be the right fit for you either, but you're certainly welcome to try, right? What comes to mind for me is building on what you picked out of my previous answer was, I think I would be looking, if you really want to scale, the best way to scale is not to just have a person, but to have a team. And if you could find another agency that was doing the kind of stuff that you need done, but isn't good at what you do, I would bring them in as kind of like not a co-founder or partners, but like some kind of swap barter of services for, a good chunk of maybe of equity, but also, like 10% of the company, not 50, or something, like whatever makes sense to you. But because there are people that do what you're saying, lots of them, and they're not good at what you do. So that to me would be interesting because there's a lot of people I get pitches all the time. Just change your LinkedIn profile to say angel investor, and you'll hear from all kinds of people. But I hear from people all the time with different kind of AI services that are looking to automate process like you're talking about. And a lot of them are non-US, right? So that can mean greater bang for your buck, essentially, in terms of manpower, or woman power. So that's an angle. I don't know if you've been thinking about that, but I think I would be thinking about that rather than trying to raise straight venture capital type money, because I don't know enough about your business, but it doesn't sound like it's one that's going to progress down the traditional kind of go public or get acquired sort of thing, which means that VC investors aren't necessarily going to be interested anyway. You're sounding like you're building an agency, and I could be wrong. And unfortunately, we don't have time to go into it, although I'd be happy to see you again in the future at one of our local events. But, if you're building something that isn't going to become, have 10,000 employees, then a lot of times VCs aren't interested. If you're talking about, a couple 100-person agency that makes you personally 5 or 10 million a year, that's a really good business, but it's not a VC type business. That's more of a partnership type business, right?
Okay.
You maybe find another agency. And anyway, that's what comes to mind. Hopefully that'll spur some thoughts.
Yeah, absolutely. Thanks, Scott.
Okay, great. Nice to see you. We'll be seeing you again soon. Okay, so I saw a quick question in the chat room. Let me just answer this. We're going to bring Chris on in a second here. Michael said, when you have masterminds meetings, are they in person in Orange County? Yes. So we have masterminds meetings once a month-ish, depending on my travel schedule. And the masterminds meetings are kind of like this, but everybody gets to talk. And so we have 40 or 50 people, and everybody brings a question, and we work through the themes together. And I moderate. I don't do all the talking. I actually started this show because at the masterminds meetings, people kept asking me to talk more because I have a lot of background, right? But the mastermind meetings are more interactive, and we do. And the answer to the question is I alternate. They're in person and online. So they used to all be local, and then during the pandemic, they were all online. And these days, I do them once a month in Southern California and once a month virtually online. So the next local one in Orange County, I'm targeting for the end of the month. We're a little behind schedule, so I don't have the date yet. But either way, if you want to get on the mailing list, we'd be happy to have you join these virtually. This goes out to all of you worldwide. And when we do these, we get people from everywhere, right? From Australia and from Japan and Berlin and Mumbai and Philadelphia and Miami, everywhere, of course, just like this show. And then everybody meets. It's a really fun networking and very stimulating. So and you can find out more about this. I don't think I have a Chiron for that actually, but it's mastermindsoc.org. But you can go to the Startup Council website and find the services there. And I'd recommend you come. And Michael, especially if you're here, come in person. Okay, I just wanted to hit that one quickly. And then up was our friend Chris. Okay, here's Chris. Hi, Chris.
Hello, everyone.
Hey, where are you today?
In Quebec City, in Canada.
Oh, Canada. Cool. Nice to meet you.
Likewise.
Bonjour.
Bonjour.
So let's talk about, you want to talk about how to approach angel investors? Did I get that right?
Exactly, yes. I'm still on the fence whether I should have angel investors or still remain with the VC, as in we all hear those horror stories, all those rumors where investors simply come in. Well, angel investors simply come in with some kind of sense of entitlement, and they ask, let's say, I want 40% of the startup, I want 50%, or I want to 80% of your company, and so forth. I would like to take those out and simply get to know what it really looks like in the other way around.
Right. Yeah, there's a lot of predators out there. So, well, I guess the place to start and steer me, just raise your hand if I'm going off track, because that's a pretty broad question. But once you're aware of it, you're already halfway to accomplishing your goal, because as soon as somebody starts talking like that, you can pretty much end the discussion. They're clearly not doing this. The in-between that's harder to suss out is there are a lot of people who act like I'm an investment banker. I help broker these things, or I'm a marketing consultant and I raise money for companies and stuff like that. And they do that, and then they want a chunk of it, even though they don't do very much. Now that can be a legitimate business, but at least in the United States, you have to be licensed to do that. You cannot raise money for a percentage. That's not a thing that you can do without being licensed by the SEC, at least as I understand it. Again, I could be wrong, but last time I looked. So if you're talking to people, you want to not talk to intermediaries. You want to talk to actual investors. So that's probably obvious, but it's worth saying because I see this all the time. You also don't want to sign a contract of any sort that offers you some kind of services in exchange for introductions. That's kind of the same thing. often those contracts have a clawback in the sense that, well, actually, I'll give you a story. This happened to a friend of mine, unfortunately, who was too anxious to raise money, and he signed a deal with this company that saw him on an online pitch. And he'd never heard of them. I never heard of them, but they said, "Hey, we're really excited about your company. Send us your deck, blah, blah, blah." Okay, great. Sign this little deal. We'll raise some money for you. Because we're going to, actually, I think they even said, we were to go into due diligence so we can invest. We need you to sign this thing. Then it turned out they wouldn't allow him to check references or anything. And so but he'd already signed the thing. Bottom line, it cost him $9,800 or something, because they had a fee in there that they had to recover their due diligence costs, which is complete bullshit. They didn't do anything. They did this they were doing this $10,000 at a time, screwing founders, right? So they had no intention of investing, as far as I could tell. And unfortunately, he had signed it without talking to me, basically. But so anyway, that's the kind of horror story you're hearing, I think. So it's really about due diligence. Google is your friend. Always ask for references. Go to established name brand events before you meet people. Look at places like the startupinvestorsdirectory.com I was talking about. Ask your friends. And everybody, it's okay to check references. That's the thing that founders are often very loath to do. They don't want to offend anybody. They're so excited that they might be getting close to money. They don't want to ask any awkward questions. But anybody who's a legit investor has done this multiple times. Sure, talk to this guy, or a girl, and they shouldn't be shy about that. If they are, that's a big red flag. Was that on point at all? Helpful?
Absolutely. Thank you so much.
Okay. That was easy. Yeah, happy to help. That kind of thing we talk about a lot here. So yeah, come back again. And if you have more specific questions, one of our masterminds workshops would probably be great for you too. I guess the other thing I would say, just as a parting shot, don't worry too much about that, because it's natural. It's the same as Michael's question at the top of the show, his first question, and I'm sure he has other questions, but what are the legal protections? People, you get worried about protecting what you've got. And that's totally understandable. I've been in that same place, right? But if you don't get out there, you're not going to get anywhere. And you will be better off by learning from a couple of those bad encounters. Just don't say anything, right? But learning from a few of the bad encounters will get you where you're going faster. Because if you guard things too closely, it will take too long. And the most precious thing you have is your time. And your time is not just in terms of hours, but it's in terms of your spirit and your enthusiasm. And if you can't spend, today, and I'm not just talking to you, I'm talking to everybody, right? You may have a world-changing idea, but if you spend the next 4 years on this and never get out of your comfort zone, you're going to run out of enthusiasm, even if you have the money, right? You've got to use your enthusiasm while you can and go for it. And if you guard it too closely, it'll wither. And I'm here to help encourage you. So hopefully that's encouraging. So there we go.
Well, thank you very much. And especially thank you for all this initiative and what you do for all the founders out there around the world. It's truly appreciated. And I'm definitely signing up for all the other events. Thank you so much, boss.
All right. Nice to meet you. À bientôt, j'espère. Okay, let's move on. So 123. All right, we're going to need to wrap up here pretty soon. That was Chris. Let's see. Did I? Okay. Okay, so Chris. Okay, I'm trying to look in the backstage here. Okay, Chris from New Zealand has. Okay, so Chris from New Zealand, and then Marina, if you want to turn your camera on, if you're still here, and we'll talk to you folks. Looks like we're running out of time. Okay. And being employed in the same amount of sort of. Okay, let's bring Chris on. Okay, Chris. Hey, good day.
Hi, good day.
Nice to meet you. So you had a sounds like you're in New Zealand, is that right?
Yep, that's correct. Yeah.
Great. Well, I'm glad you're joining us. So a sales and marketing question, was that what it was?
Yeah, you answered that already in terms of just pure commission-based sales and marketing. Okay. But I guess more broadly, if you do find yourself naturally gravitating to the, the back end, I have I guess you'd call it a scale up now. I've been doing it as a hobby. But I do have some customers, and there's a database of customers who honestly I've not said hello to in years, I guess, because I'm just, I'm in the back end tinkering. Right. I mean, partly perhaps is that a motivation thing? We just need to embrace that sales side. Tips, help, anything like that would be appreciated.
Sure. Well, yeah. So I guess I did cover that already, but I guess you're going to have to do things when you're an early stage founder that don't scale, unless you have infinite resources, in which case you wouldn't be an early stage founder, right? So the things that don't scale are those first 5 or 10 customers. And it's probably you, Chris. Sorry. Somebody's got to do it, or you have no business. And what you need to do is demonstrate some revenue in order to generate some sales, because that's what investors are going to want. And it's also going to be kind of expected, even if you can find affiliate or commission-based salespeople, they're going to know what your track record is, right? Starting from scratch is a really big ask for anybody, right? At least if you could say, I've closed 5 deals of an average this size, and we made this much money on each, that would say a lot to investors and to salespeople, because otherwise it's all just wishful thinking. Honestly, we don't know, right? We don't know. I just met you. I mean, you seem like a nice guy, but I don't know, right? And you can't imagine the number of nice people that we meet who all seem to have good ideas, right? It's really hard. And I'm not singing a sad song for investors. We're doing fine, but it's a difficult business, and it comes down a lot of it to personality and fit. And if the founder hasn't demonstrated that they're going to go out and get it, whatever it is, the next guy will. So I hope that's inspiring and not intimidating. That's the truth.
Yep. Cool.
Yeah, you're welcome. So if anybody in the chat room has other suggestions, please share them with Chris. Sounds like he's in a place where a lot of us sit. Brilliant ideas. And I think the partnership idea we've been exploring a little might also be helpful, Chris. Looking at those initial list of customers and finding out who's the most natural fit, because being an introvert is not easy. Let me put it another way. Being an extrovert is natural to some people, but for other people, it's a learned skill, and practice is what does it. And if you can start with the easy ones and do those and do them over and over, it gets easier, right? So it's the first one's the hardest. So yeah, I don't know if that's helpful. Speaking from personal experience, but nice to meet you. Hope to see you again next time.
Yeah, cool.
All right, and we'll move on here. And looks like Marina might be our cleanup here. We're going to run out of time here. Hey, Marina, nice to meet you. Where are you today?
Hi, can you hear me?
Yes.
Hello, I'm calling from Paris, from France.
Ah, bonjour. Okay.
Can you hear me?
Yes. Yes.
Right. So, yes. Thank you very much, Scott. It really has been great. You replied to answer several questions. I couldn't get exact answers on multiple webinars, so I will be your regular customer, let's say. I'm a founder of one digital platform, which is also building something kind of digital clinic for women. It's early stage, not MVP yet, somewhere in the middle. I'm run out of money, so basically still working out a couple of solutions to continue, but it's very possible that I will still need at least angel investor, like to bring MVP live. And also to relate to the previous discussion you had, I just really determined and starting like now, end of January, to network and to start going outside of their my screen research and development, to build by myself social media, to do whatever is possible, to build community, probably to build crowdfunding for services possible, because I understand how the creation is really difficult. Especially I'm being like solo founder, female founder, so it's tough. But I've been on the rampant road like for 3 years, like with incredible obstacles, I always wake up in the morning, find solution, and I'm determined to bring it live. So any other advice you can give us today? Don't want to delay too much. My basically probably, if anything special, if there is anything, if it matters to describe in any case what is kind of mid-term MVP, something is done, like 3,000 line of codes, some screens, or it doesn't matter. If there is no MVP, no MVP. That doesn't matter at all. What there is kind of a lot of things already built, but still not MVP ready, or it doesn't make sense even to present on a pitch deck, because if it's really like black and white, MVP or no MVP, and not to waste like even slides to describe what has been built so far.
Okay, so Marina, I'm having a little trouble hearing you. There's a lot of background noise. What's your question?
My question is, for example, currently I have a question about MVP. When it is not prototype, but already midway MVP, does it make any sense to describe it somehow in the deck, or it's clearly black and white, MVP ready or no MVP?
I'm sorry, I don't understand. If you have an I don't. I'm sorry, I don't understand what you're asking me. You have an MVP, or you want to know if you need one?
No. It's, let's say, half of the way towards MVP, but it's not prototype already. It's not prototype, but it's not MVP ready yet. But to finalize MVP, I will need to raise a bit of money, even if it's angel investors, not big sums. So this is the question. Doesn't matter if there is something is done and we need to finalize it all together.
Okay.
Or it doesn't matter.
Okay, so okay, I'm gonna mute you because the background is really noisy. Okay, so I think what Marina's asking is if she's raising money and she needs like half of it to complete an MVP, if now is the right time or not to raise. Is that more or less the concept, Marina? Just raise, yeah. Okay, that's about as good as we're gonna do, I think, because it's really hard to hear you. Okay, so I'll try to address that. I'm sorry if this is off base. So an MVP. Let me back up. I don't know. She said it's a digital platform, I think a health platform. So first of all, you should probably connect with Frankie and Lauren, who were on the show earlier, as well as Patty Bolenbach, who are some other female founders who are in the women's healthcare space, or who are women and or in the healthcare space. So you might want to watch the archived video later once this posts on YouTube, because as part of being a solo founder, one of the biggest challenges is being alone, right? So I heard that part of your discussion clearly. Finding support can be wonderful, and we'll be happy to hear you at some of our future events and support you there too. In terms of an MVP, I don't think you're going to be able to raise money unless you have an MVP. These days, I don't know what the market is like in France per se, but software investment these days is mostly done after there's at least a prototype and probably an MVP and even some traction. There are so many software opportunities available to investors like us that it's hard to get investors excited unless you already show that not only is the thing built, but it's functioning enough that people are buying it. Most VC type money these days is used to add fuel to a fire that's already burning, not to start the fire, if that makes sense. So I would... Again, I apologize because it's hard hearing you, and we're out of time. But I would focus on doing, and this is actually answers a bunch of the people's questions. So hopefully this is helpful for more than just you. But I would focus on doing whatever you can with whatever you've got today to demonstrate some kind of customer engagement. So whether you actually have an MVP or a prototype or not, talk to the people who are the most likely customers of what you're going to build. Maybe you haven't built it yet, but talk to the people who would be the buyers and get their feedback. See if you can get some kind of even small demonstration of interest or commitment from them. Like even just a quote saying, I think you said you were in healthcare. So you're like the head of a hospital who says, yes, if Marina built this, we're interested. Or even better, if Marina built this and it cost $10,000 a year, we'd buy 6 of them, right? Like some sort of this is what I call kind of like faux traction, like fake traction, right? It's not actually anything, but it shows that you've talked to somebody other than just yourself. And this is what I was just talking about with Chris from New Zealand a couple minutes ago. What investors are really worried about, especially with solo founders that are pre-product, is, does anybody care about this other than you? Is this even a thing? We don't know. Like, we don't know you. So you need to have somebody outside of yourself say, yes, we think this is a thing. We think it's going to happen, and we would actually pay for it. So finding that nexus of potential customers or even actual customers who will actually pay money is what you need to demonstrate. And that's what you need to demonstrate even more than you need to demonstrate a product. Because as an investor, this is kind of shocking to entrepreneurs, product-driven folks. I don't care what the product is. I'm here because I want you to make money, right? So if you can show somehow that you have a path toward money, I almost don't care what the product is or where you're at. So I wouldn't hit that too hard, right? Because of course, all of us have interests and domain expertise and so forth. And the in-between, again, is there may be friends and family who already know you and trust you, as we've talked about for an hour and a half now, who might put in some money to help you get farther along, because of course it will be easier to get commitment once you have an MVP that you can show those customers, right? So it's really a ladder of iterations. You have nothing, you build a little something, you get some feedback, then you build a little more, then you talk somebody into investing a little, then you build a little more, and then you get a little better feedback, and they commit a little more, and you have to just kind of climb up the ladder, demonstrating traction, even though you don't have a product, until you actually do have a product. So I don't know, that's kind of what I got. That was a long answer anyway, but was that helpful? You're nodding anyway. That's why I kept going. So hopefully that was somewhat useful. That's the strategy that I would adopt, because investors really, we want to see growth and revenues. That's really what it takes these days. And I don't know, I was in France this summer, but I wasn't there on business. I don't know what the investing environment is like there, but my sense is that it's harder to raise early stage money in Europe than it is in the States. And here, even in the States, you can't raise with just a pre-product MVP anymore. So you need customer traction and revenue in most cases. So I'd be happy to be wrong, but that's my impression. So, okay. So I don't know. Was that helpful?
Thank you.
Yeah, it's useful a little bit.
Thank you.
Okay.
Thank you.
Okay, au revoir. Nice to meet you, and I hope that was helpful. Okay, so we're kind of out of time here, I think. I think I'm going to have to wrap up. Let's see, what else we got here? Let me just check through the chat room here. And a lot of you stuck around today. Please I'm going to run through the chat room and respond to whatever else we have there. If you have not yet joined Startup Council, you should. It's free. Doing my best to create stuff that's helpful to you. Your likes and subscribes and shares. If you're watching this later, you can watch it on YouTube, or you can watch it. You can rewind it and watch it faster. You want to skip to the good parts. Liking and subscribing is really helpful. I know it sounds stupid, but little clicks make a big difference. And I'm honestly doing this to try to help. Okay, so don't leave yet. Let's just run through the chat in case I missed anything else. Okay. Okay, this is Wade is chiming in on, this is about incubators. If you're valued over a few $1,000,000, you're too late for an incubator or accelerator. That's something that some friends of mine recently figured out. So that's just sort of general information for all of you. Here's my LinkedIn, if that's helpful. Please follow the Startup Council, actually. That's even more useful. Trying to build the audience there. So if you can find Startup Council on LinkedIn and say hello, that would be great. Let's see. Let's see here. What is the best way to network? Well, you're doing it, Gus. Come out and say hi. Let's see. We talked about this. I'm working. Okay, this is a good one. It's too long to even say, but the question is, it actually runs out, so you can't see it. But it's about grants. Grants are something we didn't talk about that you should all be looking into. In the United States, there are things called, well, there's lots of them, but there's the Small Business Administration, the SBA runs a lot of programs. There are also the SBDC, the Small Business Development Corp, which has offices in most cities, and they run programs, free programs all the time, trying to help early stage entrepreneurs. You should check that out. I think there's the Small Business Administration has America's Seed Fund, which is in its annual grant competition right now. SBIR grants there's all kinds of stuff. A great place to look and learn about this stuff is challenge.gov. Challenge.gov. That's in the United States. They publish listings of all the current challenge and grant opportunities, and it's a good way to keep track of if you're a founder of new opportunities that might apply to you. Outside of the U.S., I'm sorry, I don't know so much. And I certainly can't compare the grant regimes in one country to another, as this person was asking. But I would encourage all of you to go look. There is free money. Governments are excited about what we're building. And by we, I mean us entrepreneurs. We're the people that are going to make a difference in the world because we actually build things and get things done. So I would encourage you to go look for grants in your jurisdiction. Okay. Renee says, any startup events in Orange County? Yeah, absolutely, Renee. You need to go to ocstartupcouncil.org. We have a community calendar. We publish all the events, and I'm personally hosting multiple events every month right here in person in Southern California, as well as traveling. I haven't talked about this lately, but if anybody's overseas and you need a speaker, I love to do public speaking. My last, I was in Melbourne in Australia this fall. I just got back from Taipei. I'm happy to do speaking around the world. I do conferences and keynotes and panels. I really do enjoy doing that. And if you have a startup ecosystem that needs advice, or an angel group that's forming, or a group of founders, or a startup convention, let me know. Happy to bring some of my expertise and energy to your jurisdiction, if that would be helpful. Okay, Nadim, sorry you're still waiting here, but you did ask this. Being employed in the same industry where I started for the last 10 years, helps when approaching angel. Yes. Okay. So this is a great point, Nadim. I'm sorry we don't have more time to discuss this, and I don't think we got to your pitch either. I apologize. But yes, domain expertise is a key thing that investors look for. So what I've talked about several times in the past hour or so is that to build a company and attract investors, you need to demonstrate growth and progress, and a team of both hopefully staff members, but also customers. And one of the ways to do that, it's all about establishing credibility, and having expertise in that field is absolutely one of the big ones. So if you do have industry experience that relates to your startup, absolutely, I would be very proud of that and put that, right up front, because any angel investor who's been around, or VC either, has lost money by investing in someone who had a great idea but turned out didn't know the market. So if you know the market, absolutely, I would play that card heavily and often. Let's see here. Okay. Okay. Yes. Here's a good thought. Matthias, this is back to Marina here, actually. Make a video. This is a good thought. Matthias is suggesting that you can, if you can't actually afford to build your full prototype or MVP, make it up and make a video of it, make it look like it works, because it's really hard for people who are non-technical, especially, to imagine what you're seeing in your head as an engineer or developer. If you can make a video, a picture's worth 1,000 words. Well, a video is worth 1,000,000 words. So that's a good tip. And he's suggesting that someone even did this. He's thinking that it might have been Dropbox that actually did this, because the MVP was too expensive, but they convinced the investors with a video. So I have not done that myself, but it seems like it might be worth a try. And perhaps that's a useful tip. Okay, and that might, are we about out of time here? I think we are. So if you have follow-up questions, you can post them on LinkedIn or on YouTube. If you're watching this later, you can post and I'll try to get back to you, or maybe other people will as well. You're all welcome to participate. We're trying to help everybody. That's the whole vibe here at the Startup Council. If you're looking for startup funding, this is a page I put up to try to help. If you want publicity for your meetups and your events, like I said, this is the URL I was looking for earlier. We have 40 or 50 meetups all over the world, and you're welcome to participate, and we'll post things from your town in that meetup if it helps to develop the community of entrepreneurship and innovation in your town. So if you're watching this from Philadelphia or Mumbai or Paris or Manila or Sydney, or Singapore, we have meetups in all those cities, and be happy to help publicize the things that you're doing. I should talk about that more. That's kind of cool, isn't it? So what else? One last commercial for Startup Investors Directory, and you should come and join us. Oh yeah, you can come work with me. Yeah, and that's it. Okay. Whew. All right, that was an hour and 45 minutes of nonstop action. I hope it was helpful to you. I'm Scott Fox from startupcouncil.org, here trying to do my best to help you change the world for the better. Hope to see you again next month to do this once a month. So tune in on the 4th Tuesday of every month at 3 p.m. Eastern, 12 noon and Pacific time. And please like and subscribe, share, tell your friends, and go to startupcouncil.org and join us. We'll be happy to help you and your startup make a difference. Thanks for watching.